everyone. I'm your daily trader, Ben, and today we're going to talk about everything you need to know about market structure. Now, as you can see on the agenda today, we're going to keep it pretty short, right? Mainly today, what I'm going to be going over is basic structure and inducements, as well as the momentum shifts and sweeps that occur within them. Now, I will touch on algo structure and trap trading a little bit, as it does go almost completely against the criteria that we're looking at here. I will maybe show a little bit of algo structure on the charts, but I want to remain to show everybody what algo structure is primarily. This keeps on going over here. Primarily what algo structure is on diagrams, because I don't want to give way too much away as of yet, right? Eventually I will give a little bit more as people stay tuned on my channel, but I want to gradually introduce what algo structure is before just jumping right into it. Otherwise, people are just going to be extremely confused. Anyways, going into what basic market structure is not that hard. What we are always looking for, right, are higher highs and lower lows, and or lower lows and lower highs for pro continuation trades, right? When we are looking for continuations in the market, we need to see the market making lower lows and lower highs, and or higher highs and higher lows. Now, what does that mean, right? That means basically when price is creating what we call structure in the market, right? We need to see some sort of BOS. This would be that break of structure, right? Which is now validating what we call the extreme, right? So once we have this break of structure that comes in the market like so, right, we need to see price retrace back into the extreme. Now, this happens across all time frames, and we're going to talk about the fractality of market structure here in a bit. As the market can do this in a bear market, it can do the same thing just as easily in a bull market, right? As we have this nice uptrending market making higher highs and higher lows, we need to see this break of structure. And then once we see this break of structure, we need to see price return back to the extreme, mitigate that extreme before rocketing. Now, can price mitigate in this imbalance and then run lower? Same thing. Can price come back, mitigate in this imbalance and run higher? Absolutely. However, what a lot of people don't realize is that all has to do with momentum, right? If there is a lot of momentum coming from this imbalance that's causing the break of structure, then that becomes your most valid POI. But nonetheless, right, if you want to be the most accurate trader and for the lack of a better word, just have less of a risk appetite here, then trading the extremes will be the best for you, right? Those will be the most probable situations over and over again, right? Now, most people probably understand this, and most people probably understand this as well, right? Now, this over here is, a little bit more of the introduction into inducements. That still has to do with basic structure, though. Nothing here is even touching on to what algo structure is, right? But the only difference between this piece of structure here and this over here, what's happening is the market's making lower lows and lower highs. However, in this case, what's different about it is that the market made a lower low here without coming back to mitigate this lower high. Now, it's important to understand that when we have a lower high that is left unmitigated, and we can see here that the market is creating this as a POI, well, what's happening is the market is creating this to induce you, right? To trap you, right? This is what original trap trading used to look like, right? Is that we'd have a pattern like this, right? And most people would be entering here. Why is this? Because most SMC traders are seeing this just in a smaller scale right over here. And so most people are selling at this level here, when in reality, there's still all this money and liquidity above, right? So the market grabs all that liquidity, returns back to its original origin over here, right? And it continues the move. I cannot emphasize how powerful this type of structure in the market is. Now that we have an understanding of what basic market structure is, making higher highs, higher lows, or lower highs, let's go into the chart here and see what we can find. I'm going to go ahead and delete everything, right? I kind of just want to jump straight into this analysis here, right? Let's look at what's been going on the past couple days here. But before I even come into the past couple days here, I want to talk about timing, session timings, and the fractality, especially in the market, right? A lot of people don't understand, like per se, we are in a weekly downtrend, right? What most people don't understand about this weekly downtrend, or say this is a daily downtrend, people don't understand that the market is fractal. So while the weekly is coming down here, the daily is fractally making moves within the weekly time frame, right? All this is making lower lows and lower highs within this lower high and lower low. Right now, coming up, knowing that this is a weekly level right here that we want to mitigate, what we pretty much need to look for here, right, is price making higher highs and higher lows in to that POI here, right? But once we tap into that POI, we're looking for that same base structure-like pattern that I always talk about. I just posted this on my Instagram, right? We need to see a sweep, right? Some sort of change of character like so right here on another time frame, right? Say this is like the 4-hour time frame. We have a change of character on the 4-hour time frame. We need to see it come back and mitigate this area right here on, let's say, the 4-hour, right? So this would be the weekly scenario, right? We see we're making lower lows, lower highs on the weekly, and then we come over here per se on the 4-hour and we make this particular pattern, and that's what allows us over here to get a nice melt. That is generally how we want to view market structure and its fractality. Now, I am going to show you guys a couple of examples here just so you can wrap your minds around it just a little bit. All right. You don't have to be going across all time frames. You could simply stick on the 15-minute time frame and understand what's going on in the market, right? What do I mean by that, right? I'll show you. Say we are looking at structure, right? All we need to do is find the higher highs and higher lows like we've been doing before, right? Let's come here and notice we're making lower lows and lower highs, right? Simply enough, we have seen that second variation, right, that I was showing before. Here's that break of structure. Here's the extreme that needs to get mitigated, right? As we can see, it got mitigated and pushed down here. But why did this work out so well, right? Well, simply, we had another break of structure here. Here was that inducement, right? So a lot of people could have came into these cells right here, start shorting the market. Now, a lot of people are like, oh, why is your SL so big? Well, you can do the same thing on the 1 minute, right? We come into the 1 minute here, right? Remember, I'm talking about that same pattern that happens over and over and over again, right? We look on the 1 minute. Here's your sweep. Here's that break of structure right here, right? Simply, I would have looked for positions generally right up around here. Right? It doesn't look like we got that 1 minute refinement. However, as you can see, the 15-minute refinement was still pretty powerful. Anyways, we could have taken these shorts here, but a lot of people are probably wondering, why did the market buy up here? Let me explain. On the macro time frames, right, we're seeing both the buy side and the sell side. Most people probably just don't realize it. The reason why I'm saying you're probably seeing just one side right now is because I just have only one side marked in, right? A lot of people are seeing how we could have sold the market from here, basing it off of this criteria, right? Where we are making lower lows, lower highs, right? Here's that inducement, and we come and we mitigate this extreme right here after we have this pattern. Right? Now, what a lot of people don't realize is that this same pattern is also a sweep, change of character to this OB, that actually causes it to go back up, right? So even though we're able to catch these sells, we are just as easily able to see the buy side and catch these buys right here. Now you guys are probably wondering, well, why didn't you tighten it down to here? What a lot of people don't realize is price can simply just mitigate, right, this imbalance, right? Once it mitigates this imbalance, price can just run, which is what is happening here, right? And you'll see that happen over and over and over again, right? Remember I said the market is fractal, right? So even though we made this nice flip over here, inside of that, there's more market structure coming in like so, right? And it's not until this break of structure here, which then validates this whole area right here to allow us to continue buying, right? In a sense, we almost have order flow being established right here, right? So we can also assume that as we keep on breaking this internal structure, right, we should continue to buy the market, right? So hopefully this is a pretty good introduction as to just basic market structure in the market, right? Let's look back in time real quick. Let's see if there's something I really like. I really like this over here. I can just already tell I'm really gonna like it. Or even this whole area right here, right? If we're simply just looking at this like so, what can we see? Here's that break of structure. And then what do we do? Come back, mitigate the extreme. Here's that break of structure, right? We come back, mitigate something from over here. Remember I said we don't always have to mitigate the extreme. We can also mitigate the decisional and cause that to run, right? Or observational, as ICT calls it. And it's the same pattern recurring over and over and over again. As long as you're looking, and I mentioned this, the extremes of price, and not everything so internal, you're more likely to trade with the bigger picture than you are with all the internal bullshit, right? Just look at the overall picture, right? See here, right? The market comes down. What happens? We have a sweep, break a structure, right? As soon as we change character, change momentum, break that structure, we can then hop into these buys right here and catch this move all the way up. And look, as we follow structure, it's just the same thing happening over and over and over again, right? Here we have that break, right? Come back to mitigate that extreme and it runs. And you'll see, since we know the direction of the market now is just coming up, we are just marking up the same thing over and over again, right? Here, just a little inside, here's that little bit of inducement that occurs. We know we got to come sweep this inducement right here, right? It looks like it grabs, I don't know if you can see, this supply that is all, or this demand that is all right here, it grabs the decisional rather than the extreme. And I talked about this. Why did it grab the decisional over the extreme? Well, I want you guys to notice something. Look at all the momentum that kicked in from this area here rather than this area here. Because so much more momentum kicked in this area here, I can rely on this decisional to be a pretty powerful area of mitigation, right? Now let's come back up and look to see if we can find the same exact structure of the market happening again, right? Higher highs, higher lows, higher highs, higher lows, higher highs. Look, 1, 2, 3 hits to the high. That's already price cycle inducement at its finest. We clearly have this momentum shift, right, in structure that I'm talking about. Here's that sweep, flip, right? And then as we can see right here, there's our ability to keep shorting, right? And then if that's not enough, right, we come mitigate right here, or sweep, break a structure right here. All this extremity of price is all an area which we can look to go short again. And as you can see, it comes back down to break structure one last time, right? Now people can, in a way, see these sweeps as 1, 2, 3 traps to the low. This is a little introduction to algo structure before popping all the way back up again, sweeping the highs and then reversing. And then we just repeat the process where we take out these lows again, it comes and mitigates something to go lower, right? When you can start identifying the external versus the internal liquidity, things are going to get a whole lot easier, I promise. But again, here's that same exact pattern, just arising over and over and over again, right? Here we can see, right? Again, market structure coming in, right? That break of structure, we're mitigating all this. We pop up, what do? We come in, sweep these highs ever so slightly, then we have this change of character right here. And all this right here is mitigatable for price to go down. So many of you guys are trying to be so precise. Notice how I'm viewing the market. I'm just looking at it like this. I'm not looking at each individual candlestick. I'm looking at the overall structure of the market, and it's allowing me to see everything that's going on within price for the most part. I haven't even really touched on algo structure yet. To get into algo structure, I'm going to have to go into a whole nother YouTube video, but I don't want to give away too much because otherwise I'm going to feel like I'm being unfair to my mentorship students who've paid me a lot of money. I don't really want to go and start exploiting all of my knowledge for free. All right, it took me 10 years to get here, to believe it or not. I can promise you though, you do not need to know algo structure to be a successful trader. Just knowing basic market structure and how the market moves from a higher high to a higher low to another higher high to another higher low is simply enough for you to be a profitable trader. As long as you understand this sweep, change of character into mitigating and running, you're perfectly good to go, to be honest. Right? You can see that it's happening all of the time. Let me just find one more example over here. Right? Here we go again. Here's that break of structure at the extreme of price. We come to do what? Mitigate all of this area right here, all that supply. Why is all that supply? Let me zoom in here and show you why all this is supply. And let me show you the fractality of the market here. All of this is supply because on a lower time frame, this right here, let me make this another color, is another higher high to higher low being created in the market. Right? This little fractality of the market right here can be somewhat of your refinement, right? Even this part of it right here, which is what gives you this little tap, right? Can you guys all see that? Here we go from lower low, lower high to a new lower low, break of structure, right? Then we have this nice little fractal move within it. This little fractal move is all liquidity. I refined to this 15-minute OB. I know this 15-minute OB is good, not only because it has its own version of a break of structure, but also because it has left quite a huge imbalance here, right? And the fact that it has left such a massive imbalance tells me that price needs to reprice into this, tap this ever so slightly, and then melts, right? This same stuff is occurring over and over and over again in the market, guys, all right? If you need my personal help in understanding all of this, please DM me on Instagram at seisners.trading.journal. I am going to put all that information in the description for you guys. But I wanted just to make a little video, on market structure, because a lot of people have been asking me, how do I view market structure? I really do have a very simple approach to it. And as you can see, if we can move in, we can constantly see how the market is just fractal over and over and over again, right? How this right here was actually also inducement to this whole extreme right here, right? And this here, right, having this break of structure is what allowed price to react right here just a little lower. But if we were smart, we would have known that the market was also fractal coming up, right? And actually would have allowed us to ping pong back into buys, as we can see right over here, right? I'm not drawing that in, crab, but would have allowed us to grab something like so. Now, there are ways to hop into the lower time frames into the M1 to make your entries a little bit more precise, 100%. But first, get the overall picture correct in, right? So many of you are trying to be so pitch perfect, trying to get, oh, this is the OB right here, but you're forgetting that price can just mitigate imbalance and run, right? You need what most people don't do is back test. Well, why did this react right where it is right here? Go into the M1, find out why it reacted into this imbalance over here, right? And then make rules to it. See how those rules are methodical and objective. Keep everything objective, right? Again, we can just see the same thing happening over and over again. Here's your external market structure just coming into the market, right? We're constantly seeing break, mitigation of the extreme, mitigation of the extreme. Why was this one valid? Well, it wasn't valid. It was valid from a fractal approach, though. If we look on those smaller time frames, and let me get rid of these real quick. This is fractal, believe it or not. If I were to go onto a smaller time frame, you'd be able to see it a little bit cleaner without all the noise. But here's the same exact setup. Boom, 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 right? We have that sweep, break a structure right here, which tells me that this whole extreme right here is mitigatable to reverse, right? I'm telling you guys, people are charging thousands, if not tens of thousands for this information. And here you're getting it pretty much all for free. Now, can you just go out into the market and start using these concepts? No, absolutely not. You need to back test and develop some sort of system that is consistent for you, right? You need to be trading the same things over and over and over again. You need to go back test those scenarios and understand maybe why a certain scenario was wrong or why a certain scenario was right, and repeat what was right rather than continue to do what was wrong. Eventually, I am going to make a video on psychology, discipline, and all that as well, because a lot of people just think that you just have to be analytically correct to be correct in the markets, and that is just not the case, right? These are very simple concepts that people just generally overcomplicate, right? And I want to make sure that like people understand it's not just an analytical skill here. It is one thing to back test 4 to 8 hours a day, and eventually that chart vision starts to kick in and all these hieroglyphics on the charts start to become, a fluent language to you, right? Second nature language to you. But applying those concepts, right, and putting good risk management rules to it, having a good sound psychology is a whole nother aspect of trading that people lack, and people forget that's about 80% of it. This is only 20% of the game, right? Well, if you are looking for mentorship opportunities, go ahead and click my Discord link in my description and you can contact me there. If you just want to talk with me and see me live trade here and there, I do that pretty much every other day now on my Instagram. But make sure to subscribe, hit that like button. You guys really are giving me some of the greatest support. It's really awesome. It really makes me want to make videos for you guys, once a week, every single week. I am sooner or later going to start making some new content that's not just, analytical chart work. A lot of you guys are wanting to see a little bit into my life and how Forex has pretty much changed my life. And I'm sure I can make some videos on that for you guys as well. But yeah, I really hope this helps a lot of you guys. I hope it really clears up any doubts that you guys may have had analytically. And if this helped, please smash that like button and subscribe because it really does help me out as well. Anyways, hope you guys have a good rest of your day. Peace.